Hey everyone, welcome back to Corporate Decoder, the place where we dive into the thrilling world of corporate filings. Today we are unraveling Broadcom's latest quarterly report, and trust me, it's not just about numbers, it's also about a big company navigating the choppy waters, and it's going to be spicy and a little bit shocking. This quarter, Broadcom is showing off some hefty revenue boosted by their recent big move and also some popular AI stuff. But is it all sunshine and rainbows? We'll see if the company is as healthy as it appears at first glance. Alright, let's jump right into what this report is all about. This is Broadcom's 10Q, a financial report card covering the quarter that ended in February. It's like checking in to see if they are making money, spending money, and if they are healthy overall. First off, a quick snapshot. As of late February, Broadcom had a huge number of shares of common stock outstanding. That's over 4 billion shares. Let's get to the numbers. I want to briefly point out their assets and liabilities at a glance. One very interesting number here is the accounts receivable jumped up to almost 5 billion from 4.5 billion the previous quarter. Their short-term debt significantly increased to over 5.5 billion. The retained earnings also look very healthy at over 2.5 billion. Now, let's switch gears and check how they performed in the quarter. We are going to scroll to the statements of operations to view the revenue. Total revenue is up significantly to almost 15 billion. This is a large increase from just under 12 billion in the same quarter last year. Their costs also increased, but their total cost of revenue is less than half of total revenue, which is a good sign. Another significant number is the interest expense, almost 900 million. Interest can be a real killer. Their net income per share is over $1 for basic income and over $1.10 for diluted income. Now, I'm scrolling to the statements of cash flow to see if this company is turning a profit or burning cash. Starting with net income over 5.5 billion, which is good to see. The company seems like a real money printing machine with over 6 billion in cash provided by operating activities. They are serious about paying off what they owe and already paid over 8 billion in debt in just 3 months. But they also love giving dividends of over 2.5 billion back to the shareholders. So after it's all said and done, they are sitting on solid cash flow and seem to be doing a good job. Moving on, here we've got the statements of stockholders' equity showing how ownership of the company changes over time. Let's see some of the intangible assets in millions. Purchase technology is high at over 35 billion, but accumulated amortization is quite high too, at over 14 billion. This amortization affects net income. Now we can scroll down to commitments and contingencies to see what they're on the hook for. It seems like their future purchase commitments sit at 300 million. As for legal, there's not much here. It is pretty standard for companies of this size. But it's now time to face reality, or better put, face risks. Every company has them, and Broadcom is no exception. Government regulations, which could significantly affect operations. If these get violated, there may be penalties. A huge risk they are talking about is VMware, which they acquired for a lot of money, but if it fails, the whole company can get hurt. Something that people may not think about often is the people themselves. They are dependent on senior management. One that is very common among large corporations, but is still important to bring up, are cybersecurity threats. Lastly, let's mention that their stock price may be volatile and your investment could lose value. And of course, this is true for most companies. Broadcom had a pretty impressive quarter. Total revenue increased significantly, fueled by both semiconductor solutions and their infrastructure software. They also managed to keep their cost reasonable, leading to a healthy profit. However, it's not all perfect. The increased debt and the reliance on VMware present significant risks. If VMware doesn't pan out as expected, Broadcom could face some serious financial challenges. Overall, Broadcom seems to be navigating a complex landscape, balancing growth with potential risks. The focus on AI is a clear strength, positioning them well for future opportunities. Thanks for tuning in to Corporate Decoder. If you enjoyed this breakdown, be sure to like, comment, and subscribe for more insightful analyses of the corporate world.